Hey everyone, welcome to the trading floor's 25 days of Tradesmas. Make sure you stick around to the end of this video to find out how you can win $1,000.
Welcome. In today's video, I'm going to be reviewing for you a trade that was placed on November 18th. You want to find this markup and you are in the trading floor community. You can find it in the testimonial sections. It is listed under November 19th of 2024. And you will see the markup that I have here, as well as the profits and then the description as to what it is that I was thinking. I'm going to review for you guys a little bit more in detail what I was seeing here and why I took this trade. So here we are on the NASDAQ 100 and I am on the 1 minute time frame. This trade was taken as part of the Strategy Wars for Season 7. I was on the Wave Rider team and I was also on the Price Action Concept team. That is what you're seeing here on my chart. I have the little wave rider guys that you're seeing. Those are little waves. And I am not using default setting here. I am using the moving averages. I have sped them up. So everything is default except for the moving averages. So I have a 21 moving average and a 75 moving average. If you're using them and looking to try and play with them a little bit, because I am on the 1 minute time frame, I do speed up the moving average a bit, and that's the line that you're seeing. That's this green and red one, and it just hugs the market a little bit closer than what you would see if it was default settings. So that's the only thing I changed. Everything else I keep the same. So when you're looking at this, it's really not that big of a deal either, the wave rider indicator, because I was using the wave rider indicator mostly for the higher time frame using the signal, but I just wanted to make sure you guys understand what I was looking at, because the crossing of the moving average is also something to consider, and that is something that I was looking at as a consideration as well. I always kind of look at that to make sure that that's also in my favor. So just so you guys know, that is what I was looking at, like this crossing, like when the market crosses here, am I looking for buys or sells? That just kind of helps to give me a trend continuation idea, especially when you're on these smaller time frames, because it can be so noisy, a little bit wicky. It can consolidate and you don't always know what you're really doing, and it can feel like you're going somewhere and then go nowhere, like this for instance. So I like to have an idea of what the moving average is doing, but also it's not the only consideration. I don't just look at the signal. I don't only look at a moving average. There's a lot of things that go into play here. So I'm going to get into explaining what I saw first and then why I peaked at that moving average. All right, first and foremost, when I look at this chart, the very first thing that jumped out at me before I took this trade was that we had a W being formed. If you don't know what a W is, basically it's this guy. We have a little leg here, and then you come up, you make a W shape, and then you have the long leg that I got into on a trade. Typically, when you're talking about W's or M's, what you'll see is that you'll have a nice leg of a trade. It'll come and dip, it'll pull back in to form the middle of your letter, your second dip, and then your last leg of that W or M is usually a pretty significant one. So people like to trade the second leg of a W or an M. The other thing that you might frequently hear it called is like either a double top or a double bottom. And then sometimes, though, you don't always get like a clean cut double top or a double bottom with a W or an M. You'll actually get like this type of situation where market structure looks like it's being formed. And then thirdly, when you're seeing something like this, so whether you're looking at it as a W, which my mind sees W's and M's, or whether you're looking at it as a double top or a double bottom, in this case a double bottom, you might see those better. Or the third option, sometimes what people are seeing is a potential divergence. Now, I don't have the RSI up on here, and I do apologize, but my market analysis instincts, the little spidey instincts, are going off and telling me that there's probably a divergence somewhere if you pulled an RSI up with this type of thing being formed. And if it was vice versa, say your double bottom was a little bit lower or something like that. But when your bottoms aren't exactly the same on your W's, or your tops aren't exactly the same on your M's, that's likely due to some sort of divergence that might be happening in price. And that is another confirmation that you potentially would be seeing something like this nice big leg of this W about to happen. So there's like 3 different ways of looking at this. Like I said, though, for me personally, I'm viewing this as a W. That's just what my eyes go to. So like you're seeing how I'm outlining that to me is a W. But you might have said, hey, I see a double bottom at that area of this zone of price. Or you might have said, hey, I bet you there's a divergence there. So whatever way it is that works for you to visualize it, doesn't really matter at the end of the day. It just matters that you're aware that there is something shifting and happening here. For me though, like I said, the W is happening. So I see this W being formed, the neckline of it come up into this zone that was already previously marked. A rejection happen here, expected to happen because we're forming a W and it's at a level of resistance, comes down again, plays around in this zone, and then finally pushes back up and breaks out up here. When this breakout happens is when I'm interested, because the market has now come up, pushed out of this zone, and also pushed above this neckline and above this area, to be honest. So this is kind of like a double win for me. But when it breaks this neckline and pushes above that, that's when I'm interested to start looking to get into a trade and maximize the potential of that last leg of that W. So that is where I entered into this trade. And the stop loss for me was just below my support level, which you guys can see the level that we had broken out of. I just put it right beneath that support level. That's pretty typical for me to do. My initial take profit for this was actually an area to the left. You can see I marked that up. And the market does get there. It was actually, this trade was cruising along. It was doing really good. The problem was me. I was the problem. I did move my stop loss to the profit, which is good. That's why I was able to still make the $800. But I took my stop loss from down here and I did move it to a pretty significant profit. Honestly, probably a little too quickly. I really should have probably waited and trailed a little further behind, probably more like in this area. But I was definitely trying to secure my profits here, and I think there's just such a good bullish move that I probably got a little overzealous, if I'm being totally honest. I definitely overshot where I thought it would, how much it would retrace, and it really barely retraced at all, but it was just enough for it to come back and stop me out. So I did mess up there a little bit. I should have probably trailed further back to really maximize this and let it get to my take profit that I had, the initial take profit that I had. But it's okay. It is what it is. $800 is still fantastic. It's almost 1 hour. It's very close to what I shoot for in a day. So I'm not mad at this trade. And this trade, like I said, was part of a strategy wars trade. So I was pretty far into strategy wars at this point. I was 18, on the 18th now. So my account at this point was doing pretty well, and it really wasn't worth it to risk not securing this trade or not maybe just getting what I wanted for the day. So it is what it is. Anyhow, my suggestion though, if I could give you guys some notes on this trade and where I potentially could have maximized it better and maybe messed up a little bit, was that I trailed too aggressively with this trade. So once it did get to that 1.5 area of my trade, I was too quick to move my stop loss too close behind. I really should have probably hung behind a little bit, like further behind, and really let it run. So that way it would have actually hit. But it is what it is. And it does make sense the way it worked out looking to the area to the left. Had I been hanging out lower underneath of this support level and just less profit, honestly, just a little bit of profit that would have been in here, still risk-free, but just a smaller amount of profit if the market had come back. Had I hung out here once the move had cleared this level, once it had cleared the resistance over here and gone above that, I should have just been hanging at the support. That's pretty normal, what I would have normally done or what my rules are to do. But I did. It looks like I broke my own rules here, and it happens. I'm human too. I did it wrong, and I did not get the full potential of this take profit because of that. So lesson learned for me. Definitely is going in my journal as a should have, could have, would have if you had followed your rules. So take that tip from me, you guys. Definitely follow your rules, because there's times like this where now my take profit wasn't hit because I just didn't follow my actual rules, and it could have been hit if I had just trailed properly. But again, I still did make money on this trade. The entry was great. This stop loss was great. There were really no other rules broken there. Just as far as how I trail them along wasn't the best, and I should have done better there. But make sure you do follow your rules. Make sure that you're formulating what it is that you will do even in this case where like maybe you're going to trail, or what happens if I want to hold longer. Having all of that in place as a plan is very useful for you, and it can make a difference as far as like how much you can maximize your trade's potential. Anyhow, that is it for this trade. I hope that was helpful for you guys, and stay tuned because there's a couple more videos still coming from me. All right, guys, I will see you in the next one.
Thanks for sticking around to the end. To be eligible for the free $1,000 giveaway, you just have to be able to receive a PayPal payment. To enter, like and comment below and come back tomorrow for another video and another chance to enter.